everyone, my name is Ken the Beer here with Stock Indices, where I go over economic data reports and my thoughts on the overall market and what I think is likely to be coming up in the upcoming week. So we're going to hop straight into this with these economic data reports here. If you're new to my channel, basically I use basically the economic data reports that the Census Bureau gives out to us, to the public, to see, and I put that in conjunction with my overall market analysis, basically, and we come up with our assumptions that way. So here's starting with Thursday. Today is May 13th. You can see down here we had initial jobless claims come in at 473,000 today. Now that is just sliding a bit from last initial jobless claims, which is good. The last one was 507, expected to be 500, coming out to be 473. So obviously right there showing us that on the ball rolling, there are less people signing up for jobless claims or putting out those jobless claims for continuous jobless claims numbers, though we are also sliding on that. You can see previously we were at 3.7 million, dropping down to 3.6 million for those continuous jobless claims. So both of those jobless claims reports coming out a little bit less than what they did initially, which is essentially showing us that less people are filing for being jobless because of the coronavirus. We tend to see those numbers fluctuate up and down a bit as people get infected, and then you got sometimes some months where people are not as affected as they were previously. So it's kind of all over the place. Sometimes we see these numbers go all over the place, and yeah. So that's for that. Then we had the producer price index slipping a bit as well. It was expected to be 0.3%, but we beat that by about 3.3%. Previously it was at 1.0%. Now we're just currently at 0.6% for the producer price index. So with that being said, we're going to hop straight into the charts here, and like I said, put that in conjunction with our overall analysis. Looking here with the Qs, I'm going to start with this one because I have a current position in this. Qs have been selling off, which I'm expecting to hold, but if we go down and look at 1 hour chart, you can see that it's going up a bit, but from yesterday was a complete red day where we opened up green to red. It's absolutely green to red. And today we held a little bit. We got some support down here in the pre-market, but we had a pretty nice, some pretty big bid in here, which pushed the market up. But as of right now, I don't know what's going on. Qs is looking pretty weak, and we can see this continue to sell off today. And honestly, to me, it's looking like we're gonna get like I said, I tell myself that if we go green or red under the support, we're in bearish territory for the overall market. Just because we've already dropped, from the highs, almost 10%, 6-7%. We dropped off the highs currently. So if we drop any more, 7% off the highs, we drop any more, down here, we're 10% off the highs. We're in bear territory. So Q is still slipping, in my opinion, just near being a bear market for the overall market. In my case here, I'm going against this trend, but if I continue to take the loss, obviously I have to get out as the sellers continue to push this thing lower. So moving on to the next. Look at these ES futures here, these S&P 500 futures. So had a huge sell-off, pushing about 5%, just about 4.5% off the highs here for ES. We were pushing to make all-time highs, sold off at a huge breakdown through some support holding the 50. If we don't hold the 50 though and get through the 50, and we start going down this area into this 40, 50, 4,000 area, we're in bear territory, excuse me, for the S&P 500 in my opinion as well for the blue chips. So just overall looking really weak for the market. It could be, the inflation that's happening. I don't know if you guys have read The Intelligent Investor, but it's a book that I'm currently reading right now, and it talks about inflation a bit. It gives some backup, some data showing that previously, like in the 1900s, 1960 to like 1990s and 2000 era, inflation, when inflation was at its all-time highs around that time, the markets seemed to sell off a lot. So maybe that could be correlated to what we're kind of seeing right now with this spike in inflation in the economy. So that's kind of my assumption on that. I'm not 100% sure, but that's kind of what I'm thinking. So yeah, we're holding this 50. As we're holding the 50, gotta see if we could potentially get back into our previous range. This 4,200 and this 4,100 area around there, kind of just estimating it out. But it's kind of the range that we were in. But if we can't get back into that range anytime soon, and we just continue to fall off, that's bearishness for the market. So keeping an eye on that for the ES. Let's look at these small caps here. The Russell 2000. Russell 2000 absolutely getting not obliterated. I can't say that because we still are in a range that's kind of obvious to see. So yeah, RTY is coming down to some support, and looking like it's starting to hold these support levels below the 50 and below the 10. So in my opinion, we are bearish here, more bearish than anything bullish. You can obviously see but like I said, it's not a good time to make your overall opinion just flat out bearish, because it's still at some support level. We could bounce from here. Now, if we go red to green from here and continue to go lower past the support level, well, we don't really have anything holding the market from just dumping. So it's just I'm not saying that any of this is going to 100% be true. What I'm kind of saying is I'm just looking for the obvious. I'm telling you all what the market is doing. It's what it's doing currently. It's not what it's gonna do, but it's what it's doing currently. And right now, it's holding up. It could reverse and go back to the highs, and could stay in this range for a little bit longer. Who knows? Or we can have a breakdown and go into no man's land, which we haven't been in for a minute, a couple months. So that is for the RTY. The next one. Look at these gold futures here. So gold is currently sitting at this 38.2% level for my Fibonacci retracement, which is a clear area of resistance and support previously that we've seen on the chart. And gold has made a nice run up. Like I said in my previous video, we doubled just to the upside since going into positive territory. So as we've been going into this positive territory, we saw a pretty nice pullback after having these big gains. But as of right now, we're holding up and it's looking pretty nice. Maybe this 10 will hold. If it holds, we can continue to see the uptrend and see it progressively get better for gold, as gold is making its move back towards the upside. And it's a little bit different from the overall market. You can see the weakness in the market, but see strength still coming in gold. Unlike yesterday, of course, gold had a bit of a pullback, but it's almost normal. It's almost, I'm not sure if it's coming from this bearishness in the market, this fear in the market, or is it just coming from because I know the equity market and gold are a little bit different. So actually a lot different. They don't move in conjunction with each other. So I know that people may be feeling better to put their money in gold as inflation starts to take over. The spiking inflation starts to take over. Maybe people are thinking, all right, well, let me start buying some gold ETFs or some gold futures, anything with dealing with gold. And that's kind of what my hypothesis is on the reasoning why gold is seeing such a big push back into positive territory, up over 10%. But like, you know, the reason why it's doing it is kind of irrelevant. But just know that gold is heading for back into that positive territory. It's heading back to those highs, which is looking nice. Seeing some pretty fluent higher highs and higher lows for gold. So keeping that on my watch list for potential swing trades in the future as it's around some key levels. So that's all it is for gold. And the last one I will be going over with you guys today is the VIX market here. VIX spiking to some very, let's put this on a daily chart, give you a perspective here. VIX, like, I mean, just look at this. Went all the way straight to 30, way past 22. Just yesterday, I saw VIX at 22. Below 22, actually, around this area here. Now VIX is shooting almost to, to $30. We only see that when the market is in. Why does this keep popping up? You guys see this? I don't understand. So as we're approaching those very high levels, that is showing us that the market had a fear factor imposed into it, making it shoot up this high. And then whenever you see the VIX spike like this, you tend to see sell-off in the market. So that is what we saw here today, looking like some resistance came in, and now VIX is slowing down a bit, and that spike from yesterday is now back down to 24, from 29.30 that we almost saw yesterday. So with that being said, that's all I'm going to do for today. I'm going to wrap it up with this one VIX here. And if you guys enjoyed this video, if you learned anything from it, leave a like, comment, subscribe. And if you have any questions about any option strategies, any things about the Greeks, everybody's confused about those, anything that you have trouble with, leave a comment below. And that's what I'm here for, to help you all understand these options, understand reading the market a little bit better. So I hope you all enjoyed this video. If you did, like I said, leave a like, comment, subscribe, and share this video, and I will see you all in the next one.